Imagine a world where major corporations hesitate before investing in the U.S., uncertain about whether policies like tariffs will remain or disappear overnight. Last night, I was in a discussion with several CEOs, and they all had the same burning question. What impact will tariffs have on long-term investments? And will they bring manufacturing back to the U.S.? This isn't just about trade, it's a deep dive into economic strategy, business growth, and global market shifts. How long must tariffs be in place before companies commit to reinvesting, even if there's a chance they could be lifted later? Well, when we talk about corporate decision-making, it's not just about tariffs. The bigger factors influencing corporate behavior include tax policies, energy security, and deregulation. The question isn't only about imposing tariffs, but about whether we can establish a stable economic environment where businesses feel confident investing for the long haul. Take, for instance, the Tax Cuts and Jobs Act. If we can make these tax incentives permanent, it creates a predictable environment where companies feel safer investing in domestic production. Similarly, ensuring energy security with affordable energy sources is another major factor that can drive manufacturing back home. Now, when it comes to tariffs, the reasoning behind them has shifted quite a bit. Initially, they were implemented for specific concerns like ensuring fair trade with Mexico, Canada, and China. But beyond that, they address other pressing issues, such as protecting domestic industries, reducing trade deficits, addressing security risks tied to foreign dependencies. Even skeptics can see the rationale behind tariffs when it comes to domestic manufacturing and economic stability. The U.S. has long debated whether trade deficits are inherently negative. While some argue that consuming more than we export is unavoidable, others believe a strong dollar and balanced trade policies are key to long-term economic success. One major challenge: inconsistency. Tariffs seem to be imposed and removed unpredictably. We negotiate with Mexico and Canada, then change course based on industry feedback. One moment, automakers resist tariff imposition, and suddenly, policies shift. This seemingly haphazard approach raises concerns about whether tariffs are being strategically placed or simply adjusted on the fly. Though when we examine similar economic and political strategies in history, we see a pattern. For example, President Trump consistently pushed for European nations to increase their defense spending. For over 25 years, previous administrations struggled to achieve this goal. Yet, through persistent negotiations and strategic positioning, Trump managed to push Europe toward fairer defense contributions. This demonstrates that economic and trade policies aren't always linear, they evolve organically. The same principle applies to tariffs. What may seem disruptive today could lead to long-term gains in the future. So, are we destined to remain in a tariff-heavy environment for the next 4 years? The answer isn't simple. Some tariffs might be necessary, at least in the near term, to correct economic imbalances, especially in relation to China. China operates under an entirely different economic framework than the U.S. They've exported their system to us, leading to lower wages and weakened domestic industries. One striking example: critical minerals. While the U.S. is actively securing resources for strategic needs, the processing of these materials is still 85% controlled by China. Each time a Western company attempts to enter this market, Chinese competitors undercut prices until they are forced out of business. This economic imbalance means that, while tariffs may not be a permanent solution, they play a crucial role in correcting trade dynamics and strengthening U.S. manufacturing. The real challenge lies in finding the right balance between economic protection and market stability. So, will tariffs be the long-term answer, or are they just a short-term disruption? The coming years will reveal whether this strategy holds or if it needs significant adjustments. What do you think? Will tariffs help revive American manufacturing, or will they cause more harm than good? Let us know your thoughts in the comments below. And if you found this breakdown insightful, don't forget to like this video and subscribe to Profit Powerhouse for more deep dives into economic trends, business strategies, and global financial insights. See you in the next one.